So I know that I've heard the same thing from people before. The stock market is gambling and you have to be really careful and it's super risky. I would love for you to kind of give us a little bit of foundational, I hesitate to use the word advice, but some tips that we can take um, into our perspective so that we can look at this as not a gamble.
Okay. So first of all, I am not a financial advisor, so I don't necessarily give out investment advice, but
Right.
I teach, educate, and so all the information that I give is for educational purposes. But in terms of tackling the stock market, there are so many different ways to actually get involved and to be invested. So you don't have to be that person that's poring over financial statements, going through, balance sheets, income statements to even understand what's going on with a company. It doesn't have to be that complicated. You take a look at, a product that you use, a company that's well known, something that you think, a company that has a future, right? That thinks 20 plus years out, and you start from there, right? You start from there. And what I like to tell my clients is to download something like the CNBC app, where you can kind of learn about news, learn about the companies that you're thinking about without actually starting to invest, because that'll get you familiar and you can see what's actually happening. But you don't have to go the individual stock route, which is something that can be very intimidating if you don't necessarily know what to look for. You can go for things like mutual funds or exchange traded funds. What are those? Those are essentially a big basket of stocks. So I can invest in a mutual fund that has Microsoft, it has Amazon, it has Apple, it has Costco, it has Target. So you have ownership across all of those companies. So that's a good way of investing without it being overly risky. When people think about the market and losing money in the market, it's you don't necessarily look at the history, right? Because if I look at the history across time, at least let's say starting in 1995, the market went down maybe 3 years in a row. But other than that, it has maybe one down year, a few up years, one down year, a few up years, or one down year, one up year. So if you are invested in the stock market, you have to think long term. If you have the right vehicle, you have to be able to go long term and not think, okay, I'm going to put my money here and want a quick return tomorrow.